Okay, well, good morning, everyone. I'm Mary Prina, and I'm the Director of Communications for the Hudson Gateway Association Realtors, and welcome to another virtual breakfast with benefits. And today we have our friend Sheetal Shawney back from CrossCounty Mortgage. Sheetal, you are one of the most popular BWB presenters because you do such a great job. And today Sheetal is going to talk about government-backed loans and how they can help your clients. So good morning, Sheetal.
Good morning. Thank you for joining in, guys. This is a great class. It's a good topic and very timely, and I'll tell you why. But for the others, one last time, if you want to come on camera, no one is judging anyone on how we look. It's all good.
Thank God.
The whole idea is to, thank you. We got another one. Thank you, Gueda. Thank Gueda. Thank you.
It's Gelda, and what a relief.
Yeah, come on camera, guys. Come. And so
Yeah.
we all look a mess. We've all been there. Look, however, it doesn't matter.
We practically woke up.
Yeah, and you know what? We're gonna have a very interactive class. When you interact, thank you, Nilsa. When you interact, you learn, you retain more. And the whole purpose of this class is to learn something that we can apply in our businesses and this interesting market we are in today. Okay, so much going on. So guys, my name is Sheetal. I have a couple of branches at, I'm the branch manager at CrossCounty Mortgage. I'm licensed in many states. Of course, I do a lot of business in New York as well. But let me tell you, I'm licensed in New York, New Jersey, Pennsylvania, Connecticut, Georgia, Florida, and that's what I do. I've been doing it for 25 years. I have no agenda but to do mortgages. I wake up in the morning, I do mortgages till I finish and I'm tired. That's what we do here. One of the things, my niche is the government-backed loans. My pipeline consists of all kinds of mortgages, but the majority is government-backed loans. I take a lot of pride and joy in these government loans that gives the best terms, the best rates to our client, okay? What happened recently with Silicon Valley Bank, First Republic Bank, right? Was that a big news? Came out of the blue, yes? Mm-hmm. How does one feel? How do we feel? How does a consumer feel when they have stuff like that happens to the bank? Not very good, correct? They start imagining things. People assume, people imagine, right? The confidence is shaken up. And so let me tell you a little bit about lending so you can intelligently talk about it to your clients, correct? You guys are leaders. You learn, you're going to educate your clients as well. We lead our clients. That's what we do. So what happens is the mortgage industry, I will kind of divide that into two buckets. Please stay with me. Pay attention because this is important, please. Bucket number one, let's call it the government-backed mortgages, okay? Government-backed mortgages that we're going to cover today are the most secure mortgages, period. Why? It's backed by the government, the US government. We're a powerful country. We are a giant economy, guys. When the government backs some things, say no more. What did our government do with SVB, with the bank? Overnight, the White House came in. Overnight, they took over and they funded them. They took care of everything. No one got any news. We got news, Silicon, but then what happened? Everything was fine, right? It did not deteriorate because the government came in. The government has a lot of power here. So these government-backed mortgages, because they're backed by the government, so even in adversity, they're rock solid, the most rock solid. Now we have the non-government, which I do also, which are the non-QM loans, people who don't qualify for government mortgages, right? We have the people who want no doc loan, stated income loan, bank statement, light doc. That's portion two, which we're not covering today, which does get affected in times of adversity, government-backed rules. So let's talk about bucket number one, government-backed mortgages, which is our topic. The different kind of mortgages. I'm going to share my two flyers with you later, guys. So don't you just pay attention to me. I'll show you the flyers I'm sharing, but let's follow through. Ask me questions. With every question you ask, everybody learns. Please don't hesitate. Okay, you can interrupt me. I don't mind being interrupted. I prefer that I answer your question. Okay. What are the government-backed mortgages? I'm going to name them, and then I'm going to cover each one in detail. I only have 1 hour. I want to make the most of it. FHA is a government-insured loan. We're going to do a deep dive into this. The veteran loans is a government-guaranteed loan. Fannie Mae and Freddie Mac, which are the conforming conventional loans. You guys like realtors love conventional pre-approvals, right? You want conventional. That's backed by the government. Okay. And then we have reverse mortgage that's also insured by the government. 203K is government insured. Okay. So let's go and start with the number one. Still the number one, even though we've had a very crazy time with this pandemic and the pent-up demand, the crazy, insane demand for homes and the lack of inventory. FHA pre-approvals are not considered that valuable right now, right? Because people are coming out with all this money. Regardless of, let's talk in general, FHA still is one of the most popular loans in this country. And today I'm going to tell you why and how easy it is to qualify for an FHA loan, okay? I'm going to share my screen. I was debating whether to share it or not, but I think I'll just do it. But I think I'd rather you focus more on the conversation and less on the PowerPoint, because PowerPoints I can share with you. It's not a big deal. Can everybody see my screen?
Yes.
Okay, good. So let's go straight into FHA, right? We all know that, what does FHA stand for? Federal Housing Administration. The government rolled out this program to increase home ownership and to make it easy for buyers to get pre-approved. They made it so easy. And because they made it so easy, guys, they had to insure themselves. Because let's say you give and I will prove it to you. You're all going to agree with me after 10 minutes. Because they made it so easy, they also take a risk. The risk is more. So what are the people, they give all these FHA loans, and then what happens when people don't pay the mortgage because they took the risk? There's a higher probability of default. That's why they have an insurance in the FHA loan. FHA, memorize. FHA is an insured loan. Everybody just take it in. Because when you talk to your client, you're going to tell them FHA is a government insured loan and tell them about it, like the way I told you. It's a very good loan. It's a privilege, and you will see why, okay? Minimum down payment, 3.5. Everybody knows that, yes? Mm-hmm. Yes, everyone knows that? Yeah, 3.5 down, right? Okay. Let me ask you a question. What are the property types? Guys, you can, if you all are all paying attention and not like on any call or there's no background music, I have no problem you unmuting, asking questions. Please ask me, like answer my questions, okay? I want you to think about my questions. FHA will fund on residential properties. What is the definition of a residential property?
It's a residential properties where people are going to live.
Okay, good.
Whether it be a single family or 2 to 4 family home property.
Love it. So residential property is 1 to 4 family house.
Mm-hmm.
Can it be 1 to 6?
No.
Because
no, Nancy. Okay. 1 to 4. Okay. If it's a 5-unit building and more than 5 unit, it falls into commercial. Property. So FHA is only for 1 to 4 unit house. Now, what Gwilda was saying, the term for that is it has to be owner occupied. Mm-hmm. The government is giving you the sweet little program that they crafted out, not for investors and saying, hey, I wish. No. But no, that's not how it works. Only and only for owner occupants, you got to occupy it. Now, if you buy a 4-family house, you can live in one, rent out the others. That's fine.
Can I ask you a question really quickly?
Yeah, sure.
Ask. How long like, for example, if I purchase a single family, which it's not too smart for me, a 1 to 4, how long would I have to live there? Is there like a clause or or something that that particular FHA?
I'll answer your question. Let me later.
Okay, I'm sorry.
No. I don't want to, in order.
Okay.
Down payment as low as 3.5. Minimum credit score. I usually like asking this question because this gives me all kinds of answers. Agents will come up with so many numbers. It's incredible. Please remember it's 580. Do I blame you for coming up with, some people will say 600, 620, 640. I don't blame you. And I'll tell you why. It's very confusing for realtors. Why? Because some banks say we want 620. Yesterday, I got referred a client, okay? And she went to her credit union. She didn't get pre-approved. She came to me and got it pre-approved. And her credit union told her, go call another lender, please. Why? Because of credit. They have a credit union, they have their own guidelines. They have their own internal credit scores that they determine. Okay, they determine the minimum credit scores. It's not what HUD and not what FHA says. And so are the bigger banks. Chase, Citibank, they don't want 580. So what they do is say, hey, listen, if you want a loan with Citibank and you want an FHA, our standard is 640. They play around with what is the real thing, and they make it higher. Okay. We at CrossCounty Mortgage, we are direct lenders for Ginnie Mae. We are not magicians. No one is a magician because we all have to follow guidelines. But we portfolio our loans. We sell it directly to the government. So I don't need no Citibank and Chase to tell me what scores. No overlays. It's 580. We do 580. And I want you all to know 580 is doable. Okay. Okay. When you have a credit score of 580, I'm very nervous. I'm nervous because it's too close to the deadline, right? To the threshold. It's like, oh my God, it becomes a risk for us. We work too many hours with every family. So we don't want it to become 579, right? By the time closing happens. So the goal is always to get out of that 580. I'll stay with the client and say, don't do this, do this. Our goal is, no, I'm sorry, you're 580, I can do it. But let me tell you, by the time, and I'm going to tell you what to do in the next 2 weeks to get out and come in the 600s. And I'm going to involve the realtor. No, none of us are getting paid on Friday. We need to close. That's how we eat our food. That's how we pay our bills. That commission is very important for us. As simple as that. And we are a team. I will tell you what I told them because you and me together are going to hold them accountable. Right? It's our job together. No confusion. Full disclosure. Okay.
Yeah, I'm sorry. I have a question regarding 580 credit score.
Yeah, sure.
Don't you pay higher interest rate if you're...
Good question. Very good question. Oh my God, I don't know how many of you know what's going on in the mortgage industry this month. In the month of May, Fanny Mae and Freddie Mac changed guidelines on fees and how they are going to price out, give rates out to clients. Once I finish FHA section, I'm going to invite you for questions. Only because it's like, I will say, okay, now ask me questions. So hold that thought, okay? I'm going to cover that. All right. Seller contribution is, what is seller contribution? Is a seller concession, right? Seller, what are the guidelines? Seller can pay up to 6% of the buyer's closing costs. Hey, in the last 2-3 years, who wants seller concession? It's out the window. I'm going guidelines right now because things will change and we will have it back. I have very few deals right now with seller concession. Like it's just not happening. Parent or relative can co-sign. Of course, they can co-sign, but in FHA, on a one-family home, any family member, anyone can co-sign, even as a non-occupant. Like, for example, parents live in California. They have their own place. They're not going to move in. But if their child is buying their first home, and let's say the child's only making $40,000, and the parents making a lot of income, I can use all their income and get this client, their child, a 3.5 down FHA loan. It's very good. I use that a lot. It's very good. Okay. Two years of employment. Yes, you need 2 years of employment. Now, one thing I'll tell you about 2 years on how it works. if I do loans for a lot of my clients' children now, right? Because I've been doing this for 25 years. So what happens is, let's say they went to school. They graduated, let's say they did their business, whatever they did, like, let's say they went to nursing school or business school, and then they went and got their first job. Now they're only working in that job for 6 months. I can still do an FHA loan because I will use the education, their diploma, and cover my 2 years. So 2 years could be the previous diploma. Like, show me that you went to, I need proof. I need transcripts, diploma, degree, something. And plus your new job, I'll do the loan. We can do it. Okay. So if you know somebody who just started to work and wants to buy a house, please educate them because we can do the loan. I do need the diploma though. Okay. Family home, 1 to 4 units. FHA will lend on condos. But it's very dry. FHA is very limited in condo financing, and I'll tell you why. The condo has to be approved by HUD, Housing Urban Development. It's the governing, body for FHA. Basically, FHA has to approve it, those buildings, right? So there is a link that I will email to you after class, and this is what the link is going to look like. Okay, we're going to go to New York. Give me a zip code in. Can I have a zip code, please, of New York? Give me a big zip code, a big city. Give me a big city one. What is that?
Big city. Oh, that's
10601.
10601,
01.
right? So I'm going to send you this link. You're going to put the zip code and the state, and you're going to hit the send button, and I'm going to show you how to read this now. Okay, this is directly, it's a government link, okay? To determine if the building is approved for FHA financing. New York. Oh, I put that in city, you see?
You put it in the wrong field. Yeah.
That's correct. I did. Okay. So that's White Plains and nothing is. So there were 2 buildings, Minerva Place and Residences, they had applied, but you see this expiration date, that's the thing you're going to look at. Don't ever look at the list and say, oh my God, this looks great. The 2 of them are approved. No, none of them are in this zip code. Go back and go and put in another zip code. Okay. So I want you to know it's not, when it comes to FHA and condos, I prefer to do conventional because I have many choices of conventional loans. It's a little bit restrictive because it's so cut and dry. Like, hey, somebody wants it, there's not even one, right? You don't want to waste your time and show your condo buyers. Be very cognizant of your time when it comes to condos. Condos is, I do a separate lunch and learn only on condos. Condo is an area where a lot of deals die because of lending. And you don't want to be one of those realtors. And I do a very good class on condos and how to protect your deal, how to set the expectation, how not to waste your time so that your deal is not dying. Okay, but I can't go too much into that today. Okay. FHA will fund on condos, like I said, only the ones that are approved by them. No co-ops. Will not fund on co-ops. Okay. Okay. Is there any income restriction for an FHA loan? What if you made $1 million and you want $1 million with 3.5% down? Is that okay? Or is there an income restriction, guys? I'm asking you a question. Yes, no?
It's okay. I'm thinking it's okay.
Yeah, it's okay. You can make a lot of money and take advantage of this loan. Okay. Now let me ask you another question. What is the mortgage limit on a 1-family house, FHA? Give me some answers, guys. Big city, White Plains.
700.
700. Thank you. Thank you for answering. Anyone else?
I'll say 550.
Thank you, Gwelda. 550, 700. Anybody else?
I say no limit on the bottom part.
You saying no limit? You think
Yeah.
you can get a $5 million loan on FHA with 3.5%?
No. I thought you say no max. There's a max.
No, what is the maximum limit on a
the max. Okay. There's a max.
There is a max. Oh, there better be a max. There's a max for everything. Yes, should be. There's nothing called limitless in lending. Okay, I'm going to show you how to. I'm going to send this link to you. You're going to be very surprised. All of you guys are going to learn something today. Okay. I've already put New York here, and I'm going to show you the FHA limits on all counties. You get ready for the surprise now. Okay. Let's say Bronx, 1,089,300. That's a good loan amount. 700 is history. It was the past. What's happened to our real estate prices? As the values of the prices go up, FHA limits keep going up, Fanny Mae conforming limits keep going up, the government back keep going up because the market drives the limit. And of course, it's done county-wise. There are high cost areas, right? So it's not the same for the entire state of New York. High cost areas, higher limits. Makes sense, yes? Look at the two family, 1.3 million, 94,775. Three family, 1.6 and change. Four families over 2 million. Good to know, right? Don't underestimate this loan. Look how much the government gives and how easily. So it's a lot of money. Mucho dinero, okay? Alrighty.
What would White Plains be?
Oh, yeah, I think it's a million. Let me show you, because White Plains is a... what county is it?
Westchester.
1 second. County. Why isn't Westchester? Westchester is the same, a million and something. Oh, here. Oh, yeah, here is the county, right? I'm the same name. It is there. It's a million, because that's a high cost area again.
Mhm.
Maybe there's another page.
I don't know. It must be.
Yeah, because it's going up to the
Yeah,
S.
you're right. But why I don't see the page? No, there should be something. I'll have to look into it. But yeah, Westchester is up there, way up there.
Can you do a search?
Yeah, I
Just
can do it.
provide a search?
Sure. I can do it. Why not? Let's type in the name. 1 second. So give me the zip code.
10601, but there's a county search.
Oh, the county here. Okay. Okay, there you go. Yeah.
139.
Yeah, I knew it, but there you see it. Okay.
Mm-hmm.
It's high. All right, done. Moving on. When
I'm sorry, I didn't see how much.
It's 1,089,300 on a one family, 1.3 and change, two family, 1.6 and change. I'm going to be sending you this link, 1.6 and change, three family, 2 million, four family. Okay.
Thank you.
No problem. When we pre-approve your buyers, right, we do something called the front ratio and the bank ratio to determine how much money we're going to give. Okay. FHA back ratio and front ratio is so high compared to conventional. To give you an example, conventional loans, it's 50. FHA is 56.9. So we lend more money on an FHA loan. Government loan, they want to encourage home ownership. They've made it easier. Just want you to understand. They're taking a risk. That's why it's an insured loan. Got it? Okay. Now, I want to ask you some questions, right? I keep telling you it's an insured loan. Oh, by the way, it's 100% gift. You don't have any money? I've done loans without bank statements in an FHA loan. Parents give all the gift, no necessary. I'll tell you, I had a loan rejected by Bank of America that came to me, and it was a good loan. The only reason Bank of America rejected it is because there were cash deposits made in the bank. Okay. And that's a no-no in the mortgage industry, right? So I just did the loan without bank statements. I just did 100% gift. I'm in compliance. I am fully in compliance. It allows it. How easy is that, right? No reserves are required on a 1, 2 family or a condo. If you buy a 3 and a 4 family, then you need 3 months reserves. For a conventional loan, it's 6 months reserves, 3 months reserves, which is nothing. It's not a lot. Okay.
I'm sorry, can you explain a little more about reserves? What was it?
Reserves, there are no reserves required on a 1 or 2 family home. But if you buy a 3 or a 4 family home, then you need 3 months reserves. One reserve is 1 month of your total mortgage payment. So the bank wants to see that you have 3 months of your mortgage payments after closing, like as a reserve account. Okay. It's not asking for a lot. You're buying a 3-4 family.
Yeah, thanks.
Sure. Okay. All right. Now my question to you is, if your client did a Chapter 7 bankruptcy and was discharged, after how many years from the date of discharge can they get an FHA loan with a 3.5 down?
7 years?
7 years. 7 years, Gwelda, thank you.
3.
And I think it changed to 10.
10, okay.
2.
3.
5 years.
5 years, thank you. So guys, what are we going to do today? We're going to learn this. And you're going to help a family to get pre-approved, okay? Because just the way you don't know, even they don't know. Our clients are clueless. They really don't know, okay? So please, let's educate them. You don't know, I do a lot of FHA loans. So what happens is I do a lot of government loans. So what happens is when I tell a client, hey, you're pre-approved, they're like shocked. They thought like you were saying 5, 7, 10, even they think that. So guys, it's 2 years.
Wow.
Everybody remember 2 years, but they could not have put a property in that bankruptcy. As long as there was no property in the bankruptcy, it's 2 years. Everybody with me? 4 years for conventional. 2 years for FHA.
But they put a property, how many years?
What is that?
If they put a property, how many years?
I'm coming to that. Okay. Now you have a client who put a property in the bankruptcy and got discharged. After how many years from the date of discharge can they get an FHA loan? Now they had a property, okay? They threw in a property in there. Now, I don't want you to answer this question. It's a tough one. I'm going to give you the answer, but pay attention. What happens is when you own a property and you go to the bankruptcy court and you do the discharge, the trustee says you don't need to pay the mortgage. The mortgage stops to even appear in your credit report because it was discharged, right? However, you still own the property, the name on the deed, your name is still on the deed. Okay, so what you need to do is 2 ways of handling it. You either sell that property and it's 3 years after that, or 3 years you call the bank and say, I want to surrender my ownership rights to you and do a deed in lieu of foreclosure. It's 3 years after that. 3 years after you took the name of the deed. You gave up the ownership. Now,
Repeat, that was at the deed in lieu of
foreclosure.
foreclosure.
Like instead of foreclosure, right? So you just call and say, hey, listen, I did a bankruptcy. This property is in my name. Can you tell me I want to surrender it to you? There are documents, deed in lieu of foreclosure. They'll immediately send it to you and you can do it. But we're in the business of real estate, no? You want to sell real estate. Please list their properties. Connect with bankruptcy lawyers. They're constantly referring business out to realtors because anybody did a bankruptcy and had a property, we should sell it. Now let's talk about foreclosures. Client did a foreclosure. Sheriff came, took the house, they didn't pay for years. All of that stuff happened. After how many years can they get an FHA loan?
Two
3.
years? 2?
5.
Listen, I love that you guys are throwing in numbers here because you're paying attention, you're engaging in this. So it's 3 years.
Oh, 3.
So between 2 and 3 years, you're done. Remember that, 2 and 3. Okay? 3 years. 3 years is nothing. Conventional is 7 years. Got it? 7 years for conventional. You see the difference. So let's say if you refer a client to me and I tell you that they can only get an FHA. I'm sorry. Like, I know this market. I know I want to do a conventional so we can get that offer accepted because we're in a stupid, crazy market. But I can because there's a reason why, right? So guys, understand that. Like we lenders, our goal is nothing but to get that offer accepted, but then sometimes it is what it is, okay? I tell all my FHA buyers, go highest, best, put in extra money if you want to be in the game, because your offer is going to be weaker. That is just the way it is. I'm going to sit and educate them because these poor buyers are going through hell. Like it's not been easy for us. It's not been easy for them. We're in this together. So I will educate them. So by the time they come to you guys, they know the drill. If you want to be in it, that's what it is. That's what it takes to buy a home today. Am I saying everything that you agree with? Please comment. If I'm open to any suggestions, discussions, please feel free.
Can you repeat what you had just said, the last statement about?
I was just saying that in order for, if you're an FHA buyer, right, and you're making an offer, you have to go highest. The only way money talks, the only way you have a chance of getting an offer is like right now is to put in more money, offer more money. Waive something, put in more money. You have to put in your strongest offer because otherwise, psychologically, even though it's not true, realtors feel conventional is better, which is not always true. It's not. Look, I'm doing a loan for an ITIN, like a tax ID client. He's not legal. Doesn't even have social. He's putting 25% down and I'm doing his loan. His offer was accepted. His offer was accepted on an ITIN, but nobody knows that. The listing agent doesn't know that. They're just looking at 25% conventional and they're giving him the deal. Whereas my FHA buyer is not getting it, even though my FHA deal is stronger. How interesting is that? And for all you listing agents on this call, it happens.
So you don't have to be legally in the country to purchase a property?
No, you don't. Those are non-QM loans. It's a tax ID loan. As long as you have a tax ID, you work, you can buy a house here. It's a very big community of people who are not legal, but they have a tax ID and they pay taxes and they buy homes. Okay.
But they have to have tax ID. That's the key. Okay, thank you.
So, no, I mean, we do loans for foreign nationals. They don't have any social, no tax ID, but that's a different program. But anyway, let's focus on government loans for today. Conventional loan versus FHA, well, it's the down payment. Let's cover it right now, right? What happens in a conventional loan? You need on a one-family house. There is an affordable conventional loan with 3% down, one-family home, but it has a lot of income restrictions. 5 otherwise, without any income restrictions, it's 5% down on a one-family house, primary residence, owner-occupied. Yes, we all know that. What about a two-family house? What is the minimum down payment? Conventional
3%?
loan, Fanny Mae, Freddie Mac.
3.5%?
3%.
15% down. Remember this. I'm going to be sharing this with you, okay? I'll tell you what I'm going to email to you so you know what you're going to get. And I'll go over it in the end, like a little cheat sheet for you. This is something you can give out to your buyers.
Didn't the conventional used to be 10%? And because of the pandemic and everything, now it's at a higher amount?
Not at all.
Oh.
Okay, here, let's come back to the PowerPoint. No, not at all. It was not 10%. It's 15% since decades on a 2-family. On a 3 and a 4-family, it's 20%. 3.5% for 1 to 4. Conventional is on a 2-family becomes 15% more money. Okay, 20% 3 and 4. It's just guidelines. Okay. I already went over bankruptcy and credit requirements. Conventional is way stricter. What's the advantage of a conventional loan, guys? 20% down. Anything more than 20% down, no PMI. Did you know that FHA is a dash loan? What did I tell you? I told you 3 times.
It's insured by the government.
Oh, thank you, Priscilla. Thank you. You're amazing. Yes, it's an insured loan. So you always are going to pay insurance. You want to put 50%, 50% down, 60% down, you always are going to be paying PMI. Period. It's an insured loan. That's why. It's an easier loan to qualify. That's why. Okay. So that's a disadvantage. So when you put 20% and more, then you should not be doing an FHA loan. We want to try and get a conventional loan, no PMI, obviously. Okay. Now, let's talk about
I'm sorry, I have one question here, 6%. Why seller wants to help to put the seller puts like 6%? What's the motivation for seller to pay 6%?
No, there's no motivation. It's we do things to make the deal happen.
Okay.
So if the buyer does not have money, then they, we say, hey, Mr. Seller, listen, if you want 600,000 in your pocket, can we put 620 as the price and you give us the credit?
I think that's also used for when the house has a violation and the
Correct.
owner wants to get rid of it as quickly and make the deal.
Yeah.
Then the seller will offer that to the client so that the deal can
Yes,
go through.
Nancy. Yes, Nancy.
Otherwise, they
What
get
happens?
stuck.
Correct. Let's say you did a home inspection and the seller agrees to give 5,000 in repair credit. Repair credit is not written in our closing disclosure. The way to handle it is, best way is, hey, Mr. Seller, just do a seller concession, give that 5,000 credit. That's applied to the buyer's closing costs. Yes, you're right.
Yep.
Now, let's talk about interest rates. I know this question was asked and I'm going to answer it now. I just went over how easy it is to get a FHA loan, right? Now, the government says, we understand if your credit score is not good. We are very understanding FHA. So the rates are very, very good, even for a 580 score. Look, I just recently closed a mortgage, FHA. It was 589 credit, and I locked in a rate at 6.25, which is really good. For that kind of credit, is very good. First of all, Fannie Mae is not going to do it. Fannie Mae, for a conventional loan, it's minimum 620, but they hate 620. You have to pay so much fees to get a 620 loan. Fannie Mae says we are going to give you the rate based on a tier system. The better the credit, right now things have changed because now they totally changed pricing this month. Bottom line is it's really a table. I can even share the table with you. It shows based on your down payment, your credit score, and the property type. We give you there is an adjustments to the rates. Not FHA. FHA is very lenient, understanding, 1 to 4 family. Your credit is not, of course, if your credit is 800, you would get a slightly better rate, but 0.25% up or down, not too much. Okay. So that is that on these deals. Now I want to talk to you about something simple, right? Let me go over conventional really quick. Other little nuances on conventional loans. Conventional loans, now we can do investment properties, jumbo loans. You can go higher in those limits. FHA has those restrictions in the limits, right? You saw those limits. They're not giving more than that. Conventional, there's no limit. You can buy a $5 million home, $10 million home, right? You can go into high limits. Of course, in the jumbo loans, the higher the loan, the more restriction, the more down payment, obviously. The higher the risk for the bank. They're going to be conservative, right?
The rates are cheaper for the jumbo versus the conventional?
I have very good jumbo products, man. The rates are so good if you're a good client. But if you're not a good client, like credibly, I'm talking about credit score, DTIs, the debt to income ratio. So in jumbo, it's like they are checking you out. They are going to give you the rate based on your credibility. Because it's of the risk, the layers of risk. That's how it is. Okay. So I wanted to cover something with you, right? In a conventional, I told you can do everything, right? There's more option, but the biggest advantage is 20% down. You don't pay PMI. In an FHA, you always will pay PMI. If you put less than 10% down, PMI is for life. You have to refinance and then remove PMI. If you put 10% or more down, then PMI can be removed after 11 years. Recently, this year, a couple of months ago, the government reduced mortgage insurance in an FHA loan and made it so attractive. It was crazy. It was from 0.85, it dropped to 0.55. FHA became very attractive. That was a very good news in the mortgage industry. PMI was reduced. You should know that. You all should know that. I sent out newsletters to all my realtors because it was big news. Okay. And I don't want to forget, so I'm going to tell you that a lot of my clients' kids or other clients, I have these young people who come and say, Sheetal, show me, I want to buy my first home, but I also want to buy another one. I want to make money with real estate. I want to accumulate wealth with real estate, right? And guys, would you all agree that wealth is accumulated with real estate? We all should be nodding and saying a big yes. I say that all the time. We get to witness the equity that our clients build, and we are a big part of it. So one simple way that one can do that with government funding loans is this. You go buy your first home, you put 3.5% down, get a 2, 3, or 4 unit property. How long do you have to live in that property? Someone asked me this question and I said, wait, I'm going to answer it. So here's the answer. 1 year. Live in it. It's a strategy. We're doing nothing wrong. It's a strategy. I'm fully in compliance. I teach my clients how to do it. Now you live there for 1 year. Anytime after the 1 year, you want to rent out the whole thing, rent it out. Now go buy a 1 family. So you bought your first home, multifamily with 3.5 down, government money, right? FHA, insured loan. After 1 year, you want to buy a 1 family now. You want to live there. You want to upgrade to a 1 family. You want to rent out that 2 family. What is the down payment that is required on that 1 family, everybody?
3%. 3%.
Okay, the answer is 5, Priscilla.
5%. Okay.
Yeah, the 3%, you have to be a first-time home buyer.
Okay.
That's one of the guidelines, okay?
Okay.
But 5%, not a big deal, right? So now you have 1 loan with 3.5% down, which you're renting with an amazing rate and everything, not doing anything illegal. Now you go buy a 1 family, 5% down, good rate, again, government funding. You're on your way to get some retirement, to build some equity in real estate. Simple, doable. I mean, of course, I know people who want many, many properties, and then those are advanced conversations I have with them, but this is a simple one for a beginner. Yeah?
Yeah.
Go ahead.
No, go ahead.
No, go ahead.
No, how about if you own a 1 family and you're buying second one as a investment, just a single family?
Okay, good question. Single family investment is 15% down. Multifamily is 25% down. Good question.
Thank you.
Excuse me, you're talking about conventional?
Yes, FHA will not do any investment.
You actually, that gentleman just asked my question.
Okay, good. Now I want to speed it through because I don't know where time went, but we have only 15 minutes. So I want to talk about 203K. 203K is just like FHA, it's a government insured loan. The guidelines are similar to an FHA, but you can borrow money to fix the house while you make the purchase. It's a rehab loan. Anybody knows that? You all know that?
What's the name again?
Is that only
203K, government rehab loan. Oh my God, it's such a good loan.
Is that only with the USDA? Is that Is that under USDA? Is
Not at
that
all,
different?
not at all, not at all. It's like an FHA loan. No, not at all. As long as you're going to live in the property. So,
For how
okay,
long?
I'll give you, wait, let me answer your question. Let me give you a little bit of tidbits about it, okay? For buyers agents, guys, let's say you have a buyer that wants to buy a house, but the person is a little bit like has a small budget based on what she wants to buy, right? And is a little finicky, like, oh my God, the kitchen is not good. Oh my God, the pit, like whatever. Oh, the basement is not finished, has issues, right? So you say, okay, listen, it's not going to work based on your budget. How about we buy a house that does not meet your needs, but you borrow money to fix it? So let's say if they like a property, they like everything about the property, but the basement is not finished and they don't have the funds to fix the basement. So, okay, you could buy this house. Let's say you need 50,000 to finish the basement. Why don't you borrow the 50,000 from the bank and do a 203K rehab loan? We will go through the purchase money, like the processes. We need licensed contractors. Again, I do a separate class on 203K loans, guys. Mary knows that. It's just talking 203K loans because it takes an hour to go over the process. Because it's a rehab loan, it's a little bit intense. We need contractors, licensed contractors to give us bids on the repairs, details on the repairs. We're adding that 50,000 to the purchase money. It's 3.5% down of the total purchase money and the rehab costs. Okay. The whole process goes on. It takes a little longer. The rates are a little bit higher by 0.25%. So the repairs will only start after we close, right? After we close, you get your commission, the seller gets that money. And then the bank and the client, we go through with the whole rehab with the contractor, the bank and the client. It's a good loan. You should know about it. If you have a separate question, you can always call me later to talk about it, or maybe I'll be doing an upcoming class on 203K. Maybe you can attend that. Okay. It's a very good option to know about. Maybe I can send you a flyer on a 203K.
That would be.
Mary, are you going to send me an email, like the list of their contact information?
We are not permitted to do that via our company policy, but I can put your information when I send out the recording, so that way that the realtors can contact.
Yeah, guys, if you want, okay, then in that case, I didn't know that. But if you want flyers, because I had a flyer for realtors on low down payment and government funding, want to give out to your clients, right? Like, so if you want these, then just email me and I'll send it to you.
Or you can include, Sheetal, if you want.
Like this is like a little sheet
the flyer.
This was for you guys, for realtors, like conventional, VA, FHA, USDA, like a little bit of a.
You can send that to me and I can send that out with the recording, and then it's up to the individuals if they want to use it or not.
Yeah, that's a good idea. That works.
Is it possible to also include some of those slides in your email, Mary, please?
Well, we're recording the whole presentation, so you'll have that.
Okay, now.
This one, this particular one, this chart, this FHA streamline, is it possible to include that in your email, please? That was very helpful.
Yeah. Listen to me. This is a gift. This is the biggest miracle in the mortgage industry, and I don't know. I hope it continues. It's been there for decades, and I take full advantage of it. It's called a streamline. If a homeowner has an FHA loan today, and if the rates go down, what we can do is reduce their rate without bank fees, without appraisal, without income check. It's the biggest gift to every FHA homeowner. If you have a mortgage, and only if you have an FHA mortgage can you flip this into a lower rate without income. So in the pandemic, I had clients who called and said, Sheetal, I lost my job. And I said, listen, let me get you a 2.5 interest rate. And they said, how? I lost my job. They were crying. I said, I don't care. I don't need employment or income.
Oh my God.
Let me save you some money today. They cried. And then they wanted to send me the entire families. And I told them, listen, don't send me your entire families, because they have to have an FHA loan. I cannot help everybody. They have to have FHA loan. If they don't, I cannot do it.
How does that PMI work? Is it a sliding scale on the dollar amount of the loan?
So if it's if you put, I'm sorry, I was distracted. If you're putting 3.5% down, the PMI is 0.55% of the loan amount. If it's 5% or more than 5% down, it's 0.5% of the loan amount.
Okay.
Regardless of your credit. Fannie Mae says, hey, listen, we'll give you PMI based on your credit score. Right? Right now, I have a buyer under contract. This was yesterday, and I was analyzing whether FHA or conventional. Even though she's paying a little bit more in conventional, we decided I recommended that she goes conventional because of the PMI factor, because she was paying just a little bit more. And also that, you know, we got the offer accepted as a conventional, so I wanted to honor that pre-approval letter. But honestly, it's like your payments could be cheaper with an FHA. Also, one other thing, guys, immigrants. It's very friendly to immigrants, FHA. Even DACA loans were approved now for FHA financing. And we do a lot of people who have those EADs and work permits and all of that stuff. Very easy, very understanding. Okay, so I'm done with that. So a little bit about 203K we covered, right? And now let me just go over this little flyers. We have like 8 minutes left. And I do want to honor your time, right? VA loan. Veterans loan. These are people who served. They went to the army, they served. The government guarantees this loan. FHA was insured. Veterans is guaranteed. 0% down. It's so much fun for a lender for me to do a VA loan because, hey, 0% down and no PMI. How great is that? We need a certificate of eligibility with their discharge status, and we can do the 0 down loan. Amazing. One of the best loans. The major disadvantage of a VA loan is that only your legal spouse can be a co-signer. No mother, father, child, nobody can co-sign, only your legal spouse, and we need a marriage certificate. Okay?
And if you are not married?
Oh, good question. You cannot. I mean, in the couple of decades, I've had 2 marriages that occurred because of the VA loan. They got married. They wanted the VA loan. They were thinking of getting married. They said, okay, let's just get married.
Can you repeat your statement? You said only legal spouse can co-sign.
Yeah. Only your husband or wife can be a co-signer. So if I'm a veteran and I went to the army, only my spouse can co-sign. I cannot add my children or my cousins or my uncles or my mother or father, no one else.
Can it also be for, I'm sorry, can it also be for active duty?
Yes, yes.
Okay.
We need the certificate of eligibility from the VA department. That's the form we need.
Okay.
Mm-hmm.
Sheetal, I'm sorry to interrupt you, but did I get this correct? The VA active member must not be married in order to get this?
No, you can be married. Oh my God, imagine the government telling you you cannot be married.
Well,
No.
that's what I was trying to figure out.
No.
Okay, so I heard it wrong. Okay.
No, let's say the income is not enough for the veteran to qualify for the VA loan, right? And so now we need to have co-signers. Let's say they have a girlfriend. They cannot put the girlfriend in the loan. Only your legal spouse has to be legally married with a marriage certificate. That's a disadvantage. So sometimes I've had cases that they have a VA certificate, but they didn't qualify because of income. They could not add any co-signer because they were not legally married. We had to change it to an FHA and do the loan.
Is the FHA for, in that case, if the active member inherited money or inherited a property, income generated property, it's under a different name, like an LLC. If that is theirs, can that be counted as income?
Yes, income is income on what is reported in your taxes. That's why people who want, they own properties and they want multiple properties, they better do their taxes right. I work very closely with CPAs and accountants. and I show them how to do it. Okay.
I have
Got
a
it.
quick question before we go off. I purchased a co-op in the city, New York. And you know, through my classes, I didn't grasp a lot of things because it's a really quick class in real estate. But I now find myself, would I qualify as a new purchaser since I never took out a loan? FHA loan? I never took out a loan. I purchased cash.
Yes, you can get an FHA loan as long as you're going to occupy the property, Gwilda.
Okay, but okay, I understand that.
Number
But
one.
would I be,
Number
so I would
two-
be considered a new home buyer then because although I bought a
Yes,
I would.
yes. Good
Gotcha.
question. Good. Gilda is saying, good question, Gilda. Let me have everyone get the benefit of your question. Gilda is saying, hey, listen, if somebody owns a property but says, I want to buy another property to live in, can I do an FHA? 100% yes. You don't need to be a first-time home buyer to get an FHA loan.
Okay.
But you have to occupy the property.
Yeah, that I understand.
For 1 year.
Minimum a year, yes.
1 year. That's
Thank
fine.
you. Thank you.
Good question, though. Okay. We have.
Can I just backtrack a quick question?
Mhm.
The 203 government rehab loan, is that insured or guaranteed?
Oh, 203K is insured. It's just like an FHA loan. Very easy to qualify. The same loan limits. Everything is the same. It's just that you're borrowing money for rehab.
Okay.
And again, 203K is not for everybody. It's a very intense loan. It's not that, hey, don't oversell a 203K, guys. Let me get off this because I want to talk to you for the next few minutes. I don't want you to look at the screen at all. Stop sharing. Okay, good.
What's the difference between insured and guaranteed loan?
The veteran is guaranteed. The government comes in case of default and takes care because it's for the veterans. Insured means they've insured. The client is paying that insurance, but it's not a guarantee. The VA is like it's a privilege.
Thank you. Guaranteed. Okay.
So guys, basically you attended the government-backed class today, and it's one of the strongest ever. Remember that in any adversity, this will rule. This is here to stay, right? Because we have the government backing, insuring, guaranteeing it, whatever. Very superior loan. It has the best terms, the best rates. And therefore, my goal when I meet a family is always to try to put it in this funding. Only if they do not qualify for the government, that's when I go into another one, which is the non-QM loans. Hey, you have a tax ID. The government is not giving you any money. Let's go to that. Do a special tax ID loan. Hey, you're self-employed. You don't report any income. Okay, let's go into the other way. So there are reasons why we will go in the other way. But other than that, it's such a great loan to start your home ownership with. Take advantage. The best rates this country has to offer in these sweet and easy guidelines. I hope I was able to prove to you today how easy it is to get a government loan with little down payment.
Wow.
And you don't need, and you had a bankruptcy and you had credit issues, we're still good to go, right?
Sheetal, a couple people have asked questions as to whether you would be able to.
I'm not a very, that's one thing.
No, I had a question first, and then I think Elda has a question. People were asking.
Can you, where is the chat? I want to read the chat because I've not been looking at the chat. I'm so sorry.
That's okay. No, I had a question as to whether you would be able to share your presentation when I send out the recording.
Yeah, I can share it.
Okay, great. Yeah. Okay, great.
Of course.
Thank you.
Yeah, I can. I'll put what I'll do is I'll put my contact information here as well. I'll just take a moment to do it. So this way you can save my number or, text me. I'm very big on, I work a lot. I'm one of those crazy people that works a lot. So yeah, and I'm very easy to reach. You can text me and
the new rules that went into effect May 1st.
Correct. That's correct.
Are you going to cover any of that?
You're talking about the pricing?
Yes.
Yeah. You know what? I should give you my company email. It's a lot better. 1 second. It's a very new grid that conventional loans came up with. It's controversial, and you're going to hear different opinions of different people about it. What they said is that if somebody's credit score is not that high, they will not charge them the extra fees. So in what happens is the people with the superior credit are not getting that sweet benefit of having that amazing 800 credit score. Whereas a person with a 680 score, they're like, hey, we'll be more understanding towards you. So of course, the person who has an 800 credit score is saying, really? I have a score. I should be getting the sweetest deal of all. But then on the other hand, somebody with a 680 is saying, oh, wow, I get to benefit. Oh, that's nice. So it's very controversial, guys.
There has to be a catch to that.
Honestly, the catch is really that they just want to neutralize the score, and whatever their mindset is, I think it is to help assist. Me personally, I feel like, hey, listen, if somebody has a 760 credit score, should get some benefit. You've earned it. But that's my opinion. It could not be yours, right? So it's like different. It's a mixed opinion going on. We have yet to see the effect of it because it's just so new as yesterday. It's like right now, this week, this has happened, guys. Okay, but at least you know a little bit. And there's like a new grid that we are now using to. It's interesting. Any other questions, guys? But I mean, it was nice, you guys. A lot of you came on video, you asked a lot of questions, you answered a lot of questions, which was good. But if you have any specific one and you want to reach out to me, my cell phone is right there. It's 201-951-6423. If you text me, I'll text you my contact card. And text me your card, I'll text you mine. And I think these days the cell phone and the texting has become the easiest way to communicate.
I'm sorry, I don't see your phone number. Where did you put it?
Oh, I'm so sorry. I thought I did.
It's in the
It's on
chat.
there.
In the chat.
It's in the
It's
chat.
in the chat.
It's there, right?
Thank you.
Yes, it is.
Okay, good.
Right. Sheetal, as usual, you do a fantastic job. Thank you so much. I just want, before everybody goes, I just wanted to share my screen about our next Breakfast with Benefits. It is Tuesday, May 16th at 9:30. This is going to be social media video secrets. So you're going to learn how to do Instagram reels, Facebook reels, YouTube videos. Everybody's into the video these days, and we're going to get a step-by-step on how to do this very easily using your phone. And you can get a lot more interaction using the reels than you do just in a news feed. So we're going to find out about that. So you'll be getting emails about that, and just sign up. It's also on our website. Sheetal, thank you so much again. I really, I think we all appreciate your insight, and I will be sending out the recording probably. Yes, Nancy's clapping. Okay.
Awesome.
Probably tomorrow morning, and we'll send, Sheetal will send me the flyer and her presentation, so everyone will have that.
I have a question. Can I attend that the reels and all? Because I
Of
need to
course,
learn
it's
too.
open to all realtors and affiliates.
Oh, can you email it to me, Mary?
Sure.
Thank you. I want to attend it too. Thank you.
Okay, great. Thank you,
Please,
everyone.
please come and join more classes of mine. I like big audiences and I like engagement. Thank you so much for attending. I had a great time to,
Bye-bye.
Thank you.
Thank you.
Thank you.
Was exciting.
everyone.
Bye, everyone.
Exciting.
Ciao, bye.
Very nice.
Bye.
Bye.
Thank you.